So Disney is approaching a monthly buys level at $74. I am a technical analyst, dude. I do take fundamentals into play, but it's all about the charts. And one thing I did not realize was when this zone was formed. This zone was formed back in 2014. What's the significance of that? Well, let's get into this article and then we can continue with the analysis. And this article is coming from Finbold. Disney stock erases decades of gains as dividend holders lose money. So as of August 25th, Disney shares have found themselves in an unexpected time warp, reverting to prices reminiscent of nearly a decade ago in 2014. Now, this particular stock trader on Twitter, he goes by the handle Gergalvin. He highlights the disconcerting trend, noting that a 2014 investment in Disney would have yielded no profits, contrary to the stock market's overall surge of 300%. So he's kind of just showing the top, which was during the pandemic when everyone was home and we all were watching streaming movies and episodes of Friends and things of that nature, and the drop. And if you scroll back, you're looking at 2014 at the $83 level. He underscored that the disheartening fact that even with dividends accounting for, shareholders have not experienced any financial gains. And that's crazy to think, even with dividends. Adding to Disney's woes, its profits have endured a significant hit, plummeting by 40% in 2022 compared to 2014. This drop has triggered concerns and raised questions about the company's ability to adapt and compete in a rapidly evolving entertainment landscape. So they last reported their third quarter earnings on August 9th, and the report revealed shrinking streaming revenues, with Disney Plus and Hulu losing 7.4% of subscribers from the previous quarter. Now Netflix was out the gates number one. Since then, we've seen a host of companies come into the streaming game, and it's very competitive, and it's a tough business to make money. And the strike in Hollywood doesn't help at this point. So this gentleman by the name of Barton Crockett, he's a senior analyst at Rosenblatt Securities, suggests breaking up the parts, because the parts, if you aggregate the value, would be greater than Disney as a whole. So Crockett's alternative involves breaking up the company into distinct entities. He envisions a theme park-centered equity TV network spun off to private equity firms, specializing in assets with cash flow challenges, and a content library that could be leveraged by various tech platforms. This proposition aims to unlock hidden value within the company and reinvigorate its financial standings. So a couple of things going on. There's rumors out there that Apple should buy Disney, right, for their content library. You've seen Bob Iger. He's trying to sell ESPN or get the professional sports leagues to invest and be a partner in ESPN. So Bob Iger had retired a couple of years ago, came back when Disney was, on a down spiral. And although he's done great things in the past, it's a different landscape today. And because of that landscape, you can see price has dropped from 200 again during the pandemic highs in terms of the stock market to $84 right now. But what does Buffett say? He says, when there's blood in the street, that's the time to buy. So price is roughly $10 away from a buy level. Now we'll look at these horizontal red and blue lines. I think that would be the best area to go long in this monthly zone. Let's scroll down to the weekly chart, and I was just trying to represent the trend down. I have projected this pullback, which was incorrect. We did pull back to the $92 level on August 7th before the next impulse down. But I am anticipating, if and when price penetrates the zone, that'll be the optimal time to buy. That's where the liquidity is at. Alright, so this is the pandemic lows. So you know that there's buyers here. Price couldn't even penetrate the zone before price shot up. And this was the origin of the strong leg to $200. Alright, so I want to see, why did I mark this here? Alright, so you have these candles here. So if I was to give you the price structure, you do have a rally in price, which takes out these pivot highs to the left, a basing candles and a rally out. Price pull back, could not get to the weekly buy zone before shooting higher. Alright, we're going to go down to the daily chart because I want to look at that blue horizontal line now. Lovely. Alright, so you have a rally in price, basing candles, and the rally out. Price did come back into that level and shoots higher. So you have a daily bias level within a weekly bias level within a monthly bias level. Very, very strong level to go long. Now the ideal level to go long in this zone is going to be below 70. But don't be surprised if price bounces higher before then. I apologize to all the Disney bag holders if you've been in the stock, 10 plus years. But hopefully the future looks brighter for Disney. Do anticipate a bounce and or reversal once price and if price continues to decline into the monthly buyers level at $74. Thanks for watching. Subscribe. Please like the video.